The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Good morning, everybody. Tommy O'Brien coming to you live from TFNN headquarters. Positive market to start things off on Wednesday. Looking at Dow Jones up 180 points, slightly off the highs that we made around the open. S&P's up about 10 points, and NASDAQ positive by 35 points. And I'm fortunate today to be joined by our man Basil Chapman, filling in for Tom this morning. Basil, good morning.
Hi, Tommy. How are you doing?
I'm doing fantastic. How about yourself? Oh, is he there? Did he just freeze? I think we might have had a freeze. We got so much market action. We'll get our man Basil back on the line in no time. So let's jump around to some of the headlines you have going on this morning. Payroll numbers for ADP, private payrolls coming out this morning, 234,000 versus an expected 185,000. Of course, we have the jobs number on Friday coming out. We'll see how that shakes out, but good number for the economy as those jobs just continue. Earnings season in full swing. We had Boeing shares jumping 6% as the company expects to crush record jet deliveries this year. And then we can't go without Bitcoin. How about it? Bitcoin maybe having its worst month since January 2015. Started this month at about 13,400. And let's just jump over and see where we are currently trading right now as we speak. Looks like everything's getting a little market action right now as that is continuing to struggle to get it up. But we were just at about 9,900, and we'll see where that does shake out. Come on, cooperate with me. No, maybe there's just too much market action. The positive, there we go. So yeah, currently Bitcoin trading 99.34. Let's check it out. We're as high as about 10,000, over 10,300 this morning, pulling back a bit, but we will see where that shakes out. So what else we have? We have oil numbers. It's Wednesday. We're going to have inventory numbers this morning, about 21 minutes from right now. Let's jump in to see where this crude oil, been quite a recent run for crude. We'll jump in. Currently, we're looking at the March contract trading at 64.31, and I'm going to jump into the commodity spreads. I'm going to jump into crude. I'm going to jump in, and let's start things off with the 11 a.m.s. We have the numbers coming out at 10:30. So right now, oil trading 64.31, and what we like to do, and we'll go over this closer as we look at things coming into the 10:30 number, but right now we have spread contracts, if you want to take a look, that jump from 64.25 to 64.75, so you're looking at $1.50 on each side. And what is nice here is we're only about 10 pennies away from where the floor and the ceiling do line up. So right now on the positive side, this one we would have about 10-12 cents in premium, intrinsic value, because we do have positive value, the floor being at 64.25, currently contract trading 64.37. We're going to have about 12 pennies in value of intrinsic value there. So the positive one's going to cost us about $21. And then on the same way, here's a similar contract, 64.25 being the ceiling. And from there we go lower, about $11. So you're looking at about $32 or 32 pennies for that oil trade for 11 a.m. And like we'd like to jump around, let's see how the 12 o'clocks line up. So 12 o'clocks, we're going to get a little bit of a different spread. We had 64.25 being kind of our pivot point for the 11 a.m.s. 64.50 would be your pivot point for the 12 o'clocks. Now the difference there would be that you would have intrinsic value to the bearish side, because right now you have oil trading 64.35, and on these contracts 64.50 down to the lower side would have about 15 cents in value, and to the positive side in the same way it's going to be all premium. And I believe we have our man Basil Chapman back on the line. Basil, you there? There we go.
Oh, the mystery of the electronic age, huh?
You know, sometimes the internet is not perfect, and when the market's rocking, maybe there's just too much action going on in that computer. But either way, maybe. So what are you looking at this morning, Basil? How's everything going?
There are a couple of things that I'm looking at. Number one is from the pattern that we're looking at in the Dow. I wonder if I can just pull this chart up right now. Yes, I think I can. So what I want you to show is there's a technique. What happened? Oh, talk about the elves in place today. A lot of elves.
Okay.
There it is. So in the Chapman wave methodology, what we look for is the lowest, most identifiable low bar, and try to count each successively higher peak alphabetically in sequence, uppercase to the upside, lowercase to the downside. Each peak is very important because it represents a turning point. And when you get to the fourth peak, peak D, other things can happen. So this is it. The Dow made a peak D, you can see right here, and at 26,616 on the 26th of January, had a very sharp pullback. I'm considering at this particular point, regardless of the history of the last month or so, where every single buying opportunity, every single pullback's been a buying opportunity, this is the first time my technicals in the daily charts are suggesting a bounce and some kind of retest of the low of yesterday.
Okay. Yeah, it's interesting. I mean, you know, you say almost the last month, right? You could almost argue the last year or two. Every pullback has. No, I'm with you.
I know most people that are listening know that it was the last month, but we can go back all the way to last. If I'm looking at the weekly chart, you can even go back to August. We never had more than, this is the weekly chart, we never had more than a 1 week pullback for all these peaks that you can see.
It's pretty amazing. So, any week you could have bought at the get-go and been positive, except for one. Yeah.
And you would have had to wait for a week or two, and boom.
And look at the monthly; it's almost the same thing. I see one red bar in there around the peak D.
Tommy, monthly hasn't had. It's had one little peak D right here in. This is March of last year, almost a year ago, and it was just 2 months, and just a tiny pullback. Then it broke out. So since the peak C that was made way back in August of 2016 at 18,668. This has been a vertical market. So, I mean, just the odds are improving for some kind of a pullback. But I have to say, at first, I must call it a pullback before I call it even a sell mode in the daily chart. You cannot be too aggressively short here. But individual stocks, some have been just pounded to the downside when they have pulled back.
You talk about many times rotation, right? I mean, we've definitely seen some of that. Even though the market just continues to plow higher, there has been some rotation in there where different stocks are carrying the market forward, and we'll see where it shakes out. But it is amazing just how, you know, law of something says that it can't go up forever, but you know, yesterday we saw a spike in that VIX above 15, and like I said in that update, I think it was only 4 times in 2017 that we traded above that level, each time being very short-lived, whether it was a couple days, whether it was 1 day, whether it was 15 minutes, you know, I'm not quite sure, but very short-lived, and today already the VIX pulling back, and I see you have the chart up. Yeah, we're at about 14. We're below 14 already. But we'll see if this one has any legs.
1542 yesterday was the high.
Yes.
Peak D. Remember, we were just talking about those Ds. So I am anticipating that the VIX is going to be way more important now than it has been for a long time, because you can see that even as the Dow was making new highs on the daily chart, the VIX has been rallying since it made a low. 8.56 it made a low back in November, popped to 14.58. Immediately fell. And that's the point that you're making. If you're looking at this chart here, the weekly chart, look how often there's been a spike over the 200-period exponential moving average, and you can go all the way.
We'll jump to it when we come back, but it makes sense. No red weeks, right? That was short-lived. We'll come right back, folks. Come on back. 3 minutes.
24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, everybody. Tommy O'Brien, Basil Chapman. Dow up 209 or 0.8%. S&P's up 12. NASDAQ up 41. So just to finish what we were talking about, Basil, it is intriguing that VIX. You can see why the VIX spikes have been so short-lived to the upside when you look at those weekly charts in terms of no weekly losses, right?
Within the context of even when it's powered high with that Brexit vote, when it shot up to 26.72, that was the 1st of July of 2016. Very next week, boom, red, right back down below the 200-period moving average. All these U-shaped patterns constantly fail. But what I am looking at is the stochastic and the MACD have been improving steadily. So this Friday is going to be very important. Does the VIX close above 13.86, the 200-period moving average in the weekly, or not? And then I think that's going to tell a big story. But Tommy, I didn't want to. We always start talking about very interesting things. I know that you like to look at things in terms of the Nadex platform. Is there something happening at 10:30 today?
That's right.
That
we like our Wednesdays. We like news action. And, of course, Wednesdays, we're going to have EIA inventories come out every Wednesday, 10:30 a.m. Eastern Time. So let's jump over. We'll take a look real quick. So every Wednesday, 10:30 a.m. Eastern Time, you have the EIA inventory numbers on crude. Of course, as those inventory numbers are released, you can get some action in the crude market. I have the March futures contract up currently right now, trading 64.37. So the numbers come out at 10:30. Right now, it's literally almost 10:20 on the dot. So we got 10 minutes until those numbers come out. And what I've done first is I've pulled up the 11 a.m. spreads, okay? So I go into commodity spreads. I go into crude oil. I'm going to start off with the 11 a.m.s. And ideally, what we're looking here for usually, Basil, is a volatility trade, okay? So we're looking to take both sides of the market and see what kind of premium they're going to be charging us for both sides of that market so that you're looking for a bigger, you're looking for a move in either direction, right?
So can I give you the numbers? I'm looking at 64.19 as the base of support that has to hold, and I'm looking at 64.50 as a spike to the upside potential.
So right now you have spreads that line up somewhat decently well. You have the underlying contract trading at 64.36, and you have spreads that have a point of 64.25. So only about 10 pennies away from where that is trading currently, which could be your floor and your ceiling. So for the bullish trade, you have a spread going from 64.25 up to 65.75, $1.50. Now in that spread, you're going to have intrinsic value, right? Because you have 64.25 is where you start getting value. The current contract is trading at about 64.33 now as it jumps around. So you're going to have about 8 pennies of value. So this is going to be the more expensive spread of them. So right now you'd be paying about $20 or 20 cents for that contract, because you're buying it at 64.44. The floor is 64.25, so 19 there. And then the bearish one is going to be all premium because you have no intrinsic value. This has value starting at 64.25 down to 62.75. So for this one, you'd be selling it, and you'd be selling it at 64.14, which is 11 pennies below the ceiling of that spread, so about $11. So you're looking at $30 for both of those spreads, which would represent 30 pennies of movement you would need away from that 64.25 price point before you start to break even. So to put that, that would either be 63.90 to the downside or 64.55 to the upside. Now, just to bring it in, the reason why this could be a little bit of a bullish trade is because you see that you only need to trade 20 cents to the upside to get your break even. We're trading right now at 64.35, whereas to the downside, you need to trade 40 cents to the downside. Now, you don't need to hold these till 11 a.m., of course. You can trade these out. If you get a spike 10 minutes, sometimes you get a spike within 60 seconds after that.
Well, that's what I'm thinking.
Yeah.
Right. It goes both ways, and one of them is much sharper than the other.
Yes, for sure. Now, that is the 11 a.m.s. What we like to do is we like to jump around and see, let's say you want a little bit more time in your trade, right? Let's say that you want to let this play out until maybe noon or potentially even 2:30 when the futures closes on crude. So let's jump over to the 12 o'clocks. Now the 12 o'clocks, I've already kind of jumped into them. They line up a little bit differently because they get set when these open. And so the price of crude, as you can see, has had some volatility already this morning, was below $64 at about 7:30 this morning, up at 64.35. So these are going to have a point of 64.50, okay? So where that changes things is instead of having a little bit of intrinsic value to the upside, which you had in the 11 o'clocks, right? You're going to have a little bit of intrinsic value actually on the downside. Exactly. So that's an intriguing, look, where if you were a little bullish or a little bearish, you could shift what trade you wanted to make. Now, keeping in mind, though, that one's at 11 a.m. and one's at 12. So on this one, again, 64.35 is where oil is going to be trading. So on your bearish spread trade, going from 64.50 down to 63, that's going to be where your intrinsic value is now, about 15 pennies. You'd be selling that contract. So that is going to be the more expensive spread this time for 29. And then the bullish one is just going to be all premium because you are about 15 pennies out of the money, you could call it, before you get any value, up to 64.50. And that one's going to be costing you 13. So the 11 a.m. spread with 64.25 was going to cost us about $30 for both of them. The 12 o'clock spread with 64.50 kind of being our pivot point, it looks like it's going to cost us about $42, which would represent 42 cents of movement you would need away from that 64.50 point before you broke even. So, and that's where you get to decide, right, whether you're market bias, whether your expectation, and we trade this all the time, and boy, sometimes the first move is not always the move that matters on this.
Well, that's the thing. I've noticed that with the crude oil especially, that it could, in fact, dive down to the 64.05 area.
Okay.
And 10 minutes later, you could be looking at 64.47.
Yes, and you can always trade out of one of those positions, keep the other one open. There's a lot of ways to trade that.
Is it possible to have a trade that says you put in a price, you can exit at 64.19?
You can always put in your bids and offers ahead of time. The nice thing about trading on the Nadex platform is you can be the market. You see the bid, you see the offer, so you can put those in ahead of time for sure. If you're looking,
Would it allow you to still have a position that would be long, that if it rallied?
Yes, and that would be where you would, so for the example you're talking about, let's say, you would, here is your bearish spread on the left. You have 64.50 down to 63. You could put a bid in there, right? Let's call it, you know, and the one thing you want to take into consideration, though, is that there's going to be some premium priced in here. So if oil trades to 64.19, you may see a slightly different bid offer, you know, as this is trading, because the spread is going from 63 up to 64.50. There may be a little bit of premium priced into that. So even if the underlying is at 64.19, there may be a little bit of a shift. But you could easily, just for simplicity, 64.19, you put that bid in, you become that, and that's where, you see, and the reason why I stress it is because even right now, the current live bid is 64.22. But you can have that bid in ahead of time, and that's actually a good idea, because if anybody's watched the program, sometimes the spike is as short-lived as 3 seconds, right? I mean, so you really do want, on a news event like this, to have those orders in ahead of time. Yeah.
Right, so that you would take it off at that level.
Yes.
Keep it and try to hold it to the upside.
And that's why you would still have your bullish position. You know, you would still have your bullish spread, and you'd have profit potential up to $66. Okay, folks, come on back. It is 10:27. Those numbers get released right at 10:30. We'll be back in 3 minutes for the EIA oil numbers.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, everybody. Tommy O'Brien with Basil Chapman. So, Basil, the numbers are out. We'll get into them in a moment, but we see oil jumping around to jump over in the chart. So it looks like oil trading a little bit lower. We were approaching 64.35 prior to the news announcement at 10:30. We saw it trade a little bit lower. Just as the numbers came out, we saw the spike lower, currently trading 64.14. So we're about 20 pennies lower than we were looking at, and we'll see where that shakes out. I know the estimate they were looking for was about 126,000 barrels of surplus, and as we get into those numbers, we'll see where they shake out. But again, we're only about a minute into the news announcement. We were looking at the 11 a.m.s, we were looking at the 12 o'clocks, and to put things in context, I still have the 12 o'clocks up. This would have been our bullish spread from 64.50 up to 66. That, of course, is now severely out of the money as we're 40 pennies below that. But the bearish spread would be where you have all your value, right? We're from 64.50 down to 63. Right. And that is the one as we continue to trade lower. If you wanted to trade out of that, that was up. And now as we speak, almost approaching 64. That was going to cost us about 42 pennies. $42, excuse me, for both of these contracts. You would have needed 42 pennies away from 64.50 to break even, and already we're approaching about 50 pennies. So you could have a profitable position if you wanted to exit that right now, buying that bearish spread back at 64.02. This spread, though, to kind of illustrate your example, would still be live. So if you were to get a bounce from this level, that is a live position where you have profit potential up until noon. Now, it hasn't turned around yet, but again, we're only about 100 seconds into the news announcement, and we're at 10:32, and you have live action until about 12 o'clock.
All right, so I'm going to stick with that thesis that we would exit on a sharp pullback and let the bullish position run until 11 o'clock and see what happens.
Yeah, you can't go wrong. You know, I mean, you'd have a small profitable position. As in, you know, you're getting out at about $64, so you'd be getting out at about $50. Even with commissions, you'd be making $6, $7 per contract that you had for each one, risking about $42 for that trade. And with that, you're only 50 cents away from any type of value for your positive spread with 90 minutes, you know, call it 87 minutes of option capability there.
Very good. And, of course, I'm behind. Funny, I was exactly with you earlier on, but with the speed that is trading now, mine's behind.
You know, it's great. We always say the Nadex platform, live quotes, get over there, folks. Get a demo account, test it out, because it is, you know, whether Tom's using the Bloomberg, whatever it be. And just so the number was 6.7 million barrels. So that is quite a surplus. 6.7 million barrels. Huge. The estimate was for a forecast of 126,000 barrels. More supply equals lower prices, folks, and that is the cause of that, and it's not stopping. 63.94 as we speak. And so on this trade, you would have profit potential all the way down to $63, looking for that 12 o'clock close. Pretty cool. This
is very interesting because the USO, which I do get, that's exactly to the second, is trading at down 0.09 at 1281. It's in the arch formation, in what I call that lowercase h formation. It's so far underneath the lows that were made at 12.84 at 10 past 10, the 30th, yesterday, exactly at this time. And it has, in my work, it has within 2 bars to close above 10.84. We'll see what happens.
Quite a number, 6.7 million barrels, when they were basically looking for flat, right? A rise of about 126,000 was the forecast. 6.7, you got almost 7 million more barrels than they were estimating. And man, you got that supply, they got to sell it. How are they going to sell it? Lower prices. That's how they're going to sell it.
So I'm looking at the XAL, which is the ARCA airline index, which has had a pretty big spill from the 124s down to the 116s, and now it's trading at 118.84. Boy, that weekly chart still looks like it's got a problem.
That sure does.
So this is interesting. Yeah, you would have thought that, well, it's up 94 cents, so that's still, it gapped up, but it's still up 94 cents. So maybe in a way there's some kind of reflex action.
It's pretty remarkable the type of action just in general over the last year that we've seen in oil in terms of the lows we made, and now we're at $65. I mean, that is quite a price point. If you had said that at any time over the last year, oil companies would have been begging for $65 oil, and airlines certainly would not have, right? I mean, that is quite a number.
Right.
Yeah.
So, but you know, when I look at the weekly chart, even the daily chart, although I've got the peak F and it says that there should be a pullback from here, I'm looking at that weekly chart, and it's holding. It's got parameters, says 64.32 and 64, but I'm looking at it and I'm saying, you know, 67.96 is the 200-period moving average in the weekly chart. It could test that. Then I think it'll have a tough time. And the support looks very good between 61 and 60. I think crude oil is just kind of stuck here for a little while.
Okay.
In a trading range.
Nice.
Yeah.
Nice. Well, we'll follow that. We'll check back in towards the end of the hour and see where oil trades, jumping back on it one more time. So right about 64.05 as we speak. And we'll check back in on it for the end of the hour. So Basil, earnings season. Let's talk. We have Facebook and Microsoft today coming out. And, of course, tomorrow, even a bigger day. It's tough to imagine a bigger day than Facebook and Microsoft, but you got Apple, Amazon, and Alphabet all tomorrow. Facebook and Microsoft. Have you taken a look at those two at all? Anything you're looking for?
I've got it right here. Let me just finish my Microsoft. I've got right all done. This is a peak C where I've got an alternate count in the daily chart. It says there could still be a pop-up in Microsoft towards the 95, 96 area. The weekly chart, at this particular point, I'm calling this a leg F because the MACD and stochastic are still very strong. And the monthly chart, look at this month. This is Microsoft. I'll show you something absolutely incredible. I'm going to show you the monthly chart. We're going to go back. And, of course, Microsoft, we can go back because that was one of those, the year 2000.
They were in trouble for a period of time, for sure.
You know, this is a fascinating thing. When you look back, 53.97, it went to a peak D. Remember D in the Chapman wave is where you got to be careful. Goes to 53.97, and this is really interesting. December goes to 53.97 of 1999. 53.38, just a 60 cents lower, was the high in January, and that was it. And then what does it do? It comes down to $14.87.
Pretty remarkable.
This is incredible, right?
That is.
So it comes down to, that was March of 2009, the exact month of the low in the down the S&P. Now, what's really interesting, from 14.87, it's trading right now at 94.28. By my count, that is a pretty good percentage gain.
And when I'm curious, I know you may not know, but I know their new CEO, is it Satya Nadella? I believe I'm pronouncing it. I mean, he has done quite a job in turning around in terms of the cloud services they have, in terms of Office 365 for the recurring payments now that everyone is paying. Service as software as a service, and it doesn't seem to be looking back. I mean, I'll even say even in our office today, we're looking at signing up more. We need more copies of maybe Microsoft Word, maybe Office 365. So they have done quite a job.
What they've done, and this was very interesting, there was a period where you could get Microsoft on whatever computer or laptop or desktop that you got, and somehow or other you could make sure that you were able to use it. Then they implemented this licensing with this like a residual.
Yes.
Started charging you per year.
They've done it right.
And that was huge
For
because
sure.
all of a sudden you've got your clients paying.
Come on back, folks. We'll finish up the conversation on
Market
Microsoft.
volatility continue to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his gold report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, everybody. Tommy O'Brien, joined with our man Basil Chapman. And Basil, just to check back in on the oil contract, because, man, it is quite an illustration of what we talked about. So we had the rise of 6.8 million barrels, much more than the forecast. Oil spikes down from about 64.30 down to below, let's see what the low was. We had it about 63.93. These are 5-minute bars that we're looking at. And the next bar spikes all the way up to 64.44. Pretty cool. That's what we were talking about. So even though it didn't get into the area above 64.50, which would be where you begin to get value on that positive spread, kind of the methodology that you had talked about, selling that down at that level, you still would have your positive trade for any type of action above 64.50. You get value. And again, we're only 13 minutes into the news event, came out at 10:30, and you would have that profit potential all the way till noon. And it's cool we got the bar because it just kind of illustrates the type of market activity you can get, and that the first move is not always the move that carries it throughout the remaining part of the day.
And you can see on my delay chart, I'm still going down. Right now, we're going down to the level
That's pretty cool.
Below.
Yep.
Right? It's really interesting, isn't it?
It is. It is. And that's, if you follow it, and that's, if you're going to trade these, you want to be following it, right? Because you want to be at least familiar with the type of moves you can get. Because, man, that would be a really shocking move when you get the move down. You have the numbers in line with you in terms of how does that spike 50 cents from there. It was even above. It was trading at 64.35 prior to the news. You have a build of 6.8 million barrels. The forecast was barely over break even, as in the forecast was about 100.
So that's not a good thing. So you wonder why it goes down and then bounces.
You got buyers, right? You got buyers no matter what. You got somebody. And so right now the contract's trading at 64.26. And again, we'll check in one more time towards the end of the hour and see where it trades. But pretty cool, for sure.
Very interesting.
Back to Microsoft.
So Microsoft, there's room here to have a spike to the upside. Everything I'm looking at on the chart just purely technically says that if it has an up spike, it really has to hold over the next 2 weeks above 92.52. Once it goes below the 9-period moving average and starts to trade below there, that starts to tell you that, yes, it's fantastic, that it's done what it's done. It just needs a timeout.
Okay.
At this point, that's the way I have to look at it. But what's really interesting with Facebook, I mean, this is a 10-bagger because it was down at 18 just after when
Quite
it
a
fell
run
from
as
the
well,
IPO.
for sure. As they just print cash, it seems like it does.
And what's really interesting, I know someone whose son works at Facebook, and over the Thanksgiving weekend, he was together with all of us at Thanksgiving, and I was talking to him, and he was telling me about what they're going through in terms of their assessing basically the verbiage, what's coming out, what are they going to allow, what can't they allow, that sort of thing.
Yes.
And my assessment was that from what I'm hearing from him, there was a bias towards a more liberal bias still,
Okay.
even though that's been the contention about Facebook
Sure.
for some time. So I'm looking at that and I'm saying, well, it's just so interesting that Zuckerberg has turned his academia. I mean, he was essentially a theoretician. He put this into practice, didn't succeed immediately as a financial, and then as soon as the earnings came out and he realized he was doing things wrong, he just got the right people to turn it around with his own thinking and the help of others to turn it into look at this monthly chart. That is incredible.
Amazing, for sure.
Straight up. So how he handles this next phase, I think, is going to be very interesting, because this is where his philosophy and the business side might start to come into conflict. It's hard to say, but you can see that if you're looking at the weekly chart, over the last, yes, it's gone to new highs, but certainly from the 175 area to 188 right now, it's taken since July of last year. So it's on an upward trend, but it's starting to have to work very much harder. My contention is that there's room here to see Facebook fail. Just one quarter, they've had fantastic quarters, but it's more important to look at the numbers. If Facebook, regardless of what they say, it's what the market reacts to. If Facebook's trading at 193 in the next 2 days and stays there, we know that when stocks get to the 195 area, they find it real easy to pop over to 206 to get to the 200s.
Okay.
But if it just struggles to do that, I wouldn't be surprised if Facebook takes a bit of a breather here, maybe goes sideways, trades within about a 15-point range downside. That's kind of what I'm thinking right now, just based on the chart formation. You never know, because it's
what I was just saying. I mean, I'm almost more interested. Not almost. I am more interested to hear what they're going to have to say about their possible guidance and about maybe what kind of changes they may be trying to make to the feed. I mean, they've already talked about making changes to the Facebook feed, so I'm sure they're going to crush it on earnings. There's still, if you're an advertiser, if you're a big-time advertiser, you're spending a lot of money on Facebook. But what are they going to say in terms of maybe trying to change the environment that people are experiencing on Facebook? Because it's not the enjoyable environment, I believe, that everyone kind of that allowed it to excel to the billions of users that currently use it. In terms of your friends, your family, the photos of your nieces and your nephews, versus the highly politicized news that is, a recurring theme that is not an enjoyable experience for almost anybody.
That's what I hear.
Yeah.
Because I don't have Facebook. I have enough to do as it is.
No. I do, and I use it less often. My dad, Tom, was on there. He's on there very rarely now, if I don't think at all, really, in the last year, because it's not kind of a friend and family environment any longer. And I think that anybody who's on there could understand that. And then combined with the fact that you really have the younger generation that is much more likely to be on, whether it's Snapchat, right, whether it's Instagram. Right. So when you look at a long-term prognosis, I could see Zuckerberg foregoing, because if you scale back some aspects of that feed, you might have less user interaction, and that might translate to less advertising revenue. But I think in the long run, whether it's a 5-year, 10-year, 20-year plan, Mark Zuckerberg is smart enough to realize that his product has to have sustainability and people need to enjoy that experience. Now, videos, I watch Facebook videos, which I actually enjoy, whether it's just, some market videos, whether it's even cooking videos, et cetera, stuff like that. So Facebook Live, but they have a little bit of a problem. And so I'm more interested, not, their earnings per share, not their revenue. What are they going to say that they could potentially do drastically different in the next year or two?
I think I think Facebook will have its greatest, Facebook and similar vehicles are going to have their greatest challenge when people realize that, we talk about freedom of speech, but what I hear from people is that the type of information that's voluntarily given out, when they realize what's being mined by people, other countries, there are people in other countries, that's their job.
Yes,
is to
I
just
would agree.
take whatever they can get, build up a little library, a reference point for people.
As our lives become more intertwined with everything, that's going to become a topic for sure.
That kind of open knowledge is going to come back, and I think it's not going to be good in the end.
Come on back, folks. We'll be back. Finish up the hour.
Or not. If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, everybody, and to jump back into the crude oil market for one final time as we wrap up the hour, 10:54, and we're about 25 minutes after the news announcement, currently trading at 64.14. So just kind of a good illustration. Here's our 10:30 bar, spikes down below 64. Man, spikes all the way back up. Good 50, 60 cents, almost to that 64.50 point. And from there, we trailed back a little bit, 64.17. And again, if we were trading those 12 o'clocks, you would still have profit potential up till the noon Eastern time price point. Pretty cool. Okay, one more thing I want to cover. Our man, Steve Rhodes. this evening, 5 o'clock, he will be doing a subscriber event for Mastering Probability subscribers. He's put together a great workshop, hour-long workshop. He requested feedback from all of his current subscribers about what they would like him to talk about most. He will be in there for an hour talking about his trading methodology, kind of put this together with the help of feedback from his current subscribers. It'll be an hour long. Of course, it will be archived. You'll have access to it, all subscribers, for as long as you want. We put it on the page for 30 days. Comes with a money-back guarantee for new subscribers. Steve does a great newsletter, regardless of the workshop, but great time to sign up. You get a month of his workshop, month of his newsletter. You get the workshop live from 5 till 6, 30-day money-back guarantee. You get his money management workshop. I encourage everybody to check it out. He will be in there tonight, 5 p.m., 6 hours from right now. Time flies.
Time flies. Yeah, this should be a great workshop.
For sure. And so, of course, we have Janet Yellen coming out 2 o'clock today with the minutes. Not much market expectation for any type of rate activity. I think, literally almost a 1-2% chance the Fed funds futures rate had it at any type of a rate change. But should be her last meeting. We'll see what she has to say. We'll see where those earnings shake out. Basil, thank you so much for joining me as always. And, of course, we look forward to the Tiger Technicians Hour at noon.
Thank you, and looking forward to it.
Awesome. Okay, folks, stay tuned. We got swim lessons coming up now. Basil back here at 12. And, of course, Steve Rhodes, Dave White, Tom O'Brien this afternoon. Have a great day, everybody.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.